Gold has hit a two-year high, but oil prices are falling. Oil analyst Abhishek Deshpande joins us now from Moscow with a perspective on what we can expect as far as crude is concerned. Abhishek, how are you reading the developments of the day and the implications as far as prices for crude?
Well, to be honest, it's very clear that the impact of Brexit was going to be negative to begin with. Firstly, it was supposed to be negative as a knee-jerk reaction. And secondly, we always believed that the initial reaction was going to be a forex-led reaction to oil prices. As you've seen, that investors are likely to move into safer havens, including dollar, which has clearly given us significant support to dollar and DXY index, and that is the first and foremost implication on oil prices, especially in the very near term. But apart from that, we have seen some oil prices retracing some of its losses, and that is because fundamentals remain very, very tight at the same time. So because the fundamentals are tight, I think any losses made on oil prices will soon be oil prices will soon recover from that, at least in the next few weeks after going down initially. But maybe by end of this year, we do see the impact of potentially wider implication of Brexit on UK and European economy and potentially hence on demand. And that to me then becomes bearish for oil towards the end of the year or early next year, as when we were already expecting stock builds around that time.
Okay, so you're talking about the end of the year outlook, but let me ask you about more short-term outlook, Abhishek. Where we were nudging 50, we're now back down to about 48 odd levels. We're down about 4.5% to 5% today. In the immediate term, what's the kind of trading range that you see for crude?
We believe that when we did our initial analysis, around 7% increase in DXY and a correlation which is very strongly related to DXY right now of oil, with oil of around 70% or so, you can see oil going down by at least $3 to $4 just based on dollar. And any other further investor-led sell-off, particularly because investors have built in a lot of long positions since the beginning of the year, almost close to 2.5 million barrels per day. If there was any investor-led sell-off, particularly on the back of Brexit or any fears of demand coming off towards the end of the year, then they will take those actions now, and that could lead to further slowdown or further fall in oil prices because of more, again, fear related to this Brexit-led slowdown in demand later in the year.
All right, Abhishek Deshpande, we'll have to leave it there. Appreciate you joining us here. Crude analyst taking us through where he expects prices. But today, down about 4.5%. That's the story for Brent as well as NYMEX.